Hey, Murphy Eyes. Happy Tuesday to you. I just came from my new doctor's office trying to get my side healed from my traumatic injury around Christmas time. So I'm hoping I'm going to get on track here. Yeah, I'm not the world's best patient, but I hope that you all are having a good day. There's a lot going on in the markets now. And I'm not the kind of person to say, I told you so, I told you so, I told you so, that we've got real trouble coming down the pike. And I think it benefits all of us to realize that we've been very conditioned since 1981, when Paul Volcker was the chairman of the Federal Reserve. And he jacked up interest rates so high that I think that the money markets were like 14-15%. And there were some loans that were going out at 20%. Mortgages were like 18%. I mean, it was absolutely insane. It's a very tough time. And under Ronald Reagan, they passed the Economic Recovery Act of 1981 with accelerated depression, and the supply side economics came in, and basically for 41 years, interest rates have fallen from about 18% on the 30-year bond down to a point of about 2.5%. That's a long-term decline. Well, if you think about interest rates as measures like a Geiger counter that measures risk in a system, the more risk there is in a system, the more it costs to borrow money, because the risk is perceived to be higher, so people want a greater return. Well, now we can see that asset bubbles are beginning to pop all over the place. Trees don't grow to the sky. You couldn't even watch the Super Bowl without looking at commercials for cryptocurrency. And what is cryptocurrency? It's a design currency that, and I've admitted I don't know a lot about crypto, but I do know that a currency is a currency is a currency. And I already know that China and India have outlawed it. China wants to have its own cryptocurrency. So these are two very major countries. I don't want to go down the path on that, but I just want to say, when everybody's pumping crypto like it's the greatest thing since sliced bread, and companies are paying millions of dollars to have commercials on the Super Bowl about crypto, well, if you ever saw my collection of magazine covers from the real estate bust that began, really the magazine covers in May of June 2005, were all touting real estate as the greatest thing since sliced bread. And we know what happened with the crash of 2008, the collapse of the real estate market. Yeah, things bounce back, but a lot of people can't hold on and wait for the bounce back, right? They don't have the ability to do that. So the crypto craze is just one aspect that I think characterizes and will characterize this period, along with this unchallenged belief that technology just goes up forever. You know, the Teslas of the world, you know, you name it, the chip companies and all that. But things change all the time. High profits, great business attracts new competitors worldwide, and pretty soon they've beaten the profitability out of it. And you got to beware when you crest over that side. There's deeper underlying issues that are going on in the economy now, and we have to prepare ourselves here that we may be embarking on a once in a multi-generational earthquake here in markets and things, where a lot of wealth can be destroyed in a very short period of time. Remember, because the Federal Reserve has pushed interest rates down for over 40 years, and the world has had cheap money, people have been pushed out of savings accounts. Forget about it. Who has a say? You know, you don't go to your cocktail party and tell people that you're getting 1/4% on your CD. They laugh at you like you got 10 heads, right? Everybody knows, man, you better get into the real estate, or you better get into the NASDAQ, the tech market, the stock market. Man, you better ride that up, because that's where the money's being made. Well, that's where the money was made But that's what makes the stock market the greatest and most rapid destroyer of wealth in the history of mankind. In a matter of days, in a matter of week, 2 weeks, a month, trillions and trillions of dollars of what was once value evaporates like that. And it only takes 5% or so of people hitting the sell button, and the 5% really starts to affect all of the rest of the equity, all of the rest of the people that are holding the equity. And if you continue to go down with pressure day after day, we've not reached that point where people are like, my God, this thing's never going to stop going down. Every time we rally, we're up 100, 200, 300, 400, 500 points. And then all of a sudden, we turn victory into retreat, and here we go again. How long do you think people are going to tolerate that? Right? Probably a pretty long time, and therein lies the problem. When the stuff starts to go, people have been so conditioned to buy the dip, hold for your retirement. The things will never change, and everything will be all right. It'll all work out in the end. Well, in 1929, it took until 1958, 1959, for the market to regain its old high. The 1989 high on the Nikkei Dow Jones of around 39,000 has still not been equaled. All these many years later, we're still fumbling, stumbling, and rumbling. Why? Because the financial landscape changed. The global landscape changed. Who talks about Japan as, the number 3 economy in the world? Or who talks about it as the powerhouse that's going to dominate the world anymore, right? Now it's all China, China, China. So, well, guess what? Months and months ago, I already highlighted that property was coming apart. Overbuilding was rampant, borrowing loans. In my opinion, China's going to go through its own 1929 unfolding here. And it all adds to world destabilization as we're seeing now. And as things start to get tough and countries begin to lift trade barriers and things like that and tariffs, it's, things are going to get pretty, could get pretty brutal out there. So right now, I wouldn't be in a position to tell people what to do, but I tell you, we're boiling a frog right now. Okay, you know that old story about you put a frog into a pot of cold water and you slowly raise up the temperature. Well, the frog will pass away before it ever realizes that it is being cooked. So there's a lot of people now that are just like, I'll just wait. And you have a lot of talking heads, these people like Cathie Wood that have the ARK investment that have just been decimated. They have taken people's money and people flooded in as usual at the top. They bought high dollar because she was viewed as some sort of guru goddess of the market that was going to lead people to the next technological wonderland. Well, technology costs money, okay? And when you deflate the whole capital structure of things, the money starts to get tight. Interest rates start to rise. Well, you're not good enough to borrow. You're too risky, blah, blah, blah. I don't know, right? Even governments are subject to that, of paying the piper for the price to borrow. So just be on your toes. Be aware of some of the forces that are out there. Hey, thanks for letting me do this eco investment update here. If you're not subscribed, please subscribe and make sure you join me on the Rosie O'Kelly channel for daily fun over there. Thumbs up are appreciated, and share this out if you think it could benefit family and friends, and tell them they should subscribe to both of those channels because we cover a lot of stuff on both of them. Thanks, everybody.